Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, May 8th, 2023. Welcome back to the podcast, Sekido-san.
Good to be back.
Good to have you. How was your Golden Week holiday?
That was nice. Even though I worked on first and second May during the Golden Week, but third to fifth, I took fast.
Nice. Yeah, so I guess it was an official holiday the second half of the week, but a bit of an unofficial holiday on Monday and Tuesday.
Right.
Yeah, but why don't we start the episode by going through what you missed, if you will, and what you're kind of, based on that, what you're expecting in the very near term.
The most impressive thing to me during the Golden Week was that the drop in dollar yen was limited when the U.S. regional banking sector stocks fell. At the same time, we don't see many factors that will drive the dollar yen higher over the near term. With the approach of the fiscal year 22 earnings announcement, the investment stance of the Japanese investors will vary depending on risk tolerance. But I'm a bit concerned that some negative news, pessimistic news, might emerge from the Japanese financial sector, especially in foreign bond and JGB losses, possibly some Japanese regional banking sector like the US. We see a neutral bias of the dollar yen range of 133 to 136. JGB rates have risen and the yen basis have widened. However, both changes were very marginal. As Japanese investors start to build their foreign bond positions, they are also beginning to rearrange their JGB holdings. Ongoing developments in the U.S. regional banking sector news during Golden Week have catalyzed the Japanese investors to rebuild dollar bond positions, and they are using the yen basis to fund their purchases. The fund flows of the foreign investors into JGBs have capped the JGB rates and the yen basis. After the Golden Week, however, Japanese investors who are likely to stand out. This will cause JGB rates to have an upward and a steepening bias, and the yen basis to have a widening bias. Also, biases need to change when foreign investors reaffirm that the JGB rate risk is very marginal and very easy to manage. Then I may change the biases of yen rates and yen basis neutral.
Okay, that makes sense. So sort of Japanese investors come out of Golden Week, and move aggressively, into foreign bonds, and that impacts price action in the very near term. But that it's obviously it's a little bit of a balance there. That sort of goes, if that causes price action to come too far, foreign investors will come in and take the other side and sort of stabilize things. Sort of interesting how the market has this sort of built-in, guardrails, if you will. I also thought it was interesting that you're talking about, Japanese financial institution, earning announcements. Obviously, U.S. regional banks have been a big pain point recently. So we should certainly watch for similar issues in Japan. Although, as you and I have discussed before, the JFSA, is really all over Japanese regional banks for unrealized mark-to-market losses in their held-to-maturity portfolios. I think a couple of years ago. So that certainly seems like the Japanese regional bank sector is in better spot than the U.S. U.S. regional bank sector.
Mm-hmm.
But let's move on. Let's talk a little bit about April fund flows. I think you kind of describe this as the nuts and bolts of Japanese financial markets, or plumbing, if you will. Stuff that that I don't necessarily pay attention, or at least close attention to. I suspect our listeners don't either, but can be very, very impactful. Go right ahead.
In April, the BOJ increased the JGB purchases after the inauguration of the new governor, Kazuo Ueda, which prevented a battle over the 0.5% ceiling on a 10-year JGB yield. Crude quartile operations were very small, and the JGB lending was reversed because of less demand of JGBs, those contributing to monetary base increase. After the BOJ left the policy unchanged at the April monetary policy board meeting on April 27th to 28th, the JGB 10-year JGB yield declined to 0.39%. According to the forecast of the fiscal funds to the private sector in May, the release by the Ministry of Finance on May 2nd, the MOF has not changed the issuance forecast of TDBs for May to June. Over the near term, the front end of the JGB yield curve is likely to stay calm at the current level, as the issuance of TDBs will remain steady.
Okay, so there's some good reason that the market, the market sort of rallied off that 50 basis point ceiling on JGBs. Not only did the BOJ leave monetary policy unchanged, but they stepped up buying, and they also, let the they let the monetary base expand, which is obviously helpful there too. So that's a great review. But what about looking forward? What should our listeners expect from Kishida, Ueda, and Japanese financial markets in general during the month of May?
Recently, the Kishida administration popularity has improved, and with the G7 Hiroshima summit on May 19th to 21st ahead, the market is speculating about the dissolution of the Diet lower house. The BOJ's next move in monetary policy will change depending on the Kishida's politics. The timing of whether BOJ's next move will likely be determined in May when the G10 risk profile of the Japanese financial sector and the Kishida political agenda become clearer. Fiscal year 22 financial results of the Japanese banks and the rival sectors are scheduled for the release in mid to late May. Changes in valuation gains and losses of the foreign bonds and JGBs, as well as the G10 rate risk tolerance, will be closely watched. The lifer sector stepped up its shift to the short-term foreign bonds from January to March 2023, but it will be interesting to see whether investment portfolios change in the future. We expect the Japanese lifer sector to return to super long JGBs, and the financial risk profiles of major lifer at the end of the fiscal year 22 will be an important catalyst for changes in the JGB yield curve. Over the short term, if credit unease continues in the U.S. regional banking sector, foreign investors will tend to strengthen their preference for JGBs, given their relative low interest rate risks. Since issuance of TDBs will remain unchanged, foreigners' appetite will likely depend more on the dollar-yen forward premium. In the G10 bond market, JGB rates carry the smallest risk and are relatively attractive, so there is a good chance that flows into JGBs from foreign investors will ease the burden on the JGB yield curve controlled by the BOJ.
Okay, so keep an eye on Kishida's approval rating. As speculation, continues to simmer that he could dissolve the lower house and call a snap election. That obviously influences what the BOJ can do, because they certainly don't want to be making major monetary policy changes, into an election. And then watch for fiscal year 2022 financial earnings announcements from Japanese banks as well as Japanese lifers, with a particular look at lifers for the reason that you mentioned. And at the end there, just a good reminder that, JGBs are sort of the ultimate flight to quality instrument, because of their low interest rate risk. And you should continue to see them perform well, in any, U.S. regional banking sector, driven, risk off trade or otherwise. Does that sound about right, Sekido-san?
Yeah, that's right.
Great. Well, thanks again for coming on the podcast. Really appreciate it.
Yeah, thanks for having me, John, as usual.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.